How would you like to work with more affluent clients, be their most trusted professionals, and build a seven-figure tax practice? The accounting profession is undergoing significant changes, and as the AICPA pointed out in their Horizons 2025 report, accountants are no longer defined by traditional services such as tax preparation, audits, and financial statements. Accountants are now expected to be their clients' most trusted advisors. There are many challenges facing accounting firms, such as attracting and developing new business, a limited brain trust, because really one person can only learn so much. Also, clients now have access to information that used to be proprietary. There's new federal and state regulations which are increasing in complexity and cost to comply. They're dealing with affluent client demands and expectations. They see companies like Apple and IBM paying less than 5% of their income in taxes, while affluent clients are upset because they have to be paying as much as 40% or more of their income in taxes. Accountants are also dealing with A clients leaving for greener pastures to other accounting firms promising better services. There's the third-party referral model, which is full of risk, really no organic growth, and then the seasonality and workload compression, causing accountants to have very little time for what's most important to them, and their quality of life is suffering as a result. And these are just some of the many challenges facing accountants today. In a recent survey on what small and medium-sized businesses want from their accountant, the Sleater Group found that 76% of business owners think their accountants are not being proactive enough in helping them, and over 70% of their clients really aren't even sure what exactly their accountants can do for them. In fact, the survey also found that 72% of small business owners have changed their accountant or accounting firm, at least in part, because the firm only gave them reactive services instead of providing proactive advice. And to top it off, 36% are now looking for a new CPA. Accountants are also overwhelmed with the time commitments to serve the B and C clients, time that really should be spent serving their A clients. Too many accountants are losing their A clients because they're being underserved, and losing the wrong clients can be devastating to a lot of firms. To make matters worse, when an affluent client needs a simple tax mitigation strategy, let alone a complex strategy, most accountants are still using old business models that are outdated and filled with inefficiencies, and are exposing accountants to a lot of unnecessary risk. So we created the team-based model to bring together some of the brightest, most forward-thinking professionals from around the country. As a virtual family office, we specialize in helping accountants focus on proactive and holistic planning, allowing accountants to deliver more value to their affluent clients. So what type of planning can our team actually help with? Advanced tax planning, business planning, financial planning, succession planning, and estate planning, just to name a few. Now let me say this right up front. We're not interested in just trading referrals or getting access to your list of clients. Our goal is to work behind the scenes to support top accounting firms. See, accountants that have the ability to help affluent clients or business owners with any problem or concern have a huge advantage over their competition that just look for the same old basic tax deductions that everybody else is aware of. The main question, though, is how does an accountant in this environment offer proactive and holistic planning while meeting the demands that are already placed on their shoulders? The answer is by working smarter, not harder, and utilizing leverage. Let me show you how. This diagram represents the outdated third-party referral model. The bubble there in the center, marked accountant, represents you. The bubble on the right, marked clients, represents all of your clients. The small bubbles represent just some of the 10 to 15 different specialists you need all around you to offer proactive and holistic planning. Now think about how many clients you actually have. What is it, 200, 500, 1,000 plus clients? So in order to give each of your clients the type of proactive and holistic planning that they need and oftentimes expect, you have to have a lot of relationships, which represents a lot of moving parts for each one of your clients. And let's face it, affluent clients really only want one place to get their answers. If an affluent client has a very important issue, they really don't want to have to call 12 different people, the accountant, the banker, the insurance agent, the attorney, the financial advisor, and on with the same question. And they really will probably get 12 different answers and then have to try to go and simulate all that information themselves? No, the affluent clients want to go to one trusted source, the most trusted business advisor, which really should be you as their accountant, their go-to person. The Affluent client can ask the accountant a question, and the accountant can go work with their entire team to get the very best answers and also the reasons why those are the best answers. Then the accountant can go back to their client with confidence, unlike the outdated referral model where each specialist is just trying to sell the one thing that they're best at or they get best compensated by. Now, what we do to help better serve your clients is we come right along next to you and we provide you the support that you need. So instead of having to juggle those 10 to 15 different relationships with specialists, as illustrated on the last slide, in addition to all of your clients, now you only need one relationship, and that's with us. When you consider the needs of the mass affluent and affluent clients, what you'll find is that 95+% of those needs fall into one of 5 areas, and those are: first, legal services. That could include things like buy-sell agreements, wills, trusts, entity structuring, asset protection, and on and on. The second area would be tax planning, including compliant tax work such as tax returns and audit services, as well as things like estate tax, capital gains tax, income tax mitigation planning. The third area then is risk protection in the form of insurance. That could be life insurance, long-term care, property and casualty, and captive insurance. The fourth would be wealth management, things such as retirement planning, investments, and college savings, and then business advisory services. Things like helping business owners with leadership development, with employee retention, with succession planning, with company culture, etc. Now, our goal has been to build strategic partnerships with top-notch professionals in each of these 5 areas to allow an accountant such as yourself to plug in to our team in any area that you need. And equally as important, if you have a great team member that you want to keep on your team, no problem, you can plug them in as well. We expand our accountant's brain trust, operating like a virtual family office. And our team is made up of some of the brightest and most forward-thinking professionals in the country who cover vast areas of income and estate tax mitigation. Working together as a team allows accountants to bring the most timely, proactive planning ideas to the table for their most important affluent clients. And it's all done in the most efficient, risk-free manner possible. Let me illustrate the difference for you between the outdated third-party referral model and the team-based model inside of a virtual family office. So let's say one of your affluent clients, who we'll call Scott, is preparing for retirement in the next 5 to 7 years and decides to finally bring in a business partner who we'll call Sarah. It pays off. Together they just landed a huge new contract, and it's going to not only double the size of their business, but also his personal income will go from $300,000 to about $600,000. Now, he's obviously initially pretty excited about this, and then he starts thinking about the tax ramification. That's going to be a lot more in taxes, so he calls you, his go-to person. Now, based on your discussion with him, you think a defined benefit plan might be appropriate. So you introduce Scott to your defined benefit referral source, Matt, as you think Matt could help set up a plan and probably reduce some of those taxes. Initially, Scott seems a little reluctant because he doesn't know Matt from Adam, but let's assume he follows your advice because he trusts you. And sure enough, Matt creates a defined benefit plan for Scott, and at the end of the year, Scott was able to make a large contribution because of his age and his income level, and he saved about $50,000 in taxes. Hey, so everyone's happy, right? I mean, in hindsight, it looks like a win-win-win. Scott saved money on his taxes, Matt got a new client, and, well, you connected them. But the story really doesn't end there, so let's dig a little deeper. Again, Scott, who's one of your best clients, is now at a football game. He's up in one of those suites with a few of his buddies, and you know the old saying, birds of a feather flock together. These are the exact type of affluent, successful clients that you would love to bring into your firm as new clients of yours. It's halftime, and eventually the topic of business comes up, and Scott says, business is booming. Last year we landed a major contract, doubled our company, also increased my income from about $300,000 to $600,000. And I was honestly a little concerned about the tax ramification of that. So called my accountant, and he introduced me to this guy who put something in place called, I think it was a defined benefit plan. But anyways, it ended up saving me about $50,000 in taxes. Now one of his buddies says, wait a minute, how did you do that? Scott says, well, this guy named Matt helped me put this plan in place, and the contributions are tax deductible. And now here's the key part. Scott's friend then replies, "Wow, can I get Matt's number? I'd like to see if that would work for me." So let's break down what really happened here. Again, Scott, one of your very best clients, is now giving out Matt's number, not yours, to all of his successful business owner buddies. Here's Scott helping Matt grow his business, not helping you. You took the risk of making the introduction. If Scott and Matt didn't get along, Scott might be upset with you, but you really received nothing in return. And it doesn't stop there. Let's take a step back and break this down a little further from Scott's perspective. Now, first of all, the defined benefit plan. It may have ended up helping him save taxes, but what about the buy-sell agreement for him and Sarah? I mean, was that ever discussed? And also, he plans to retire in 5 to 7 years, but how? Is Sarah going to buy him out? And there are a lot of unintended consequences of doubling the size of a business that quickly, including oftentimes losing key employees who feel lost in the expansion, and the owners becoming professional plate spinners. On the personal side, his income went from $300,000 to $600,000, which is great, but does he really need all that extra income now to live on? If not, perhaps a combination of a qualified and a non-qualified plan could have been considered. That would have allowed the upfront deduction while providing tax-free income on the back end. But again, let's set that aside. The biggest issue from your perspective really is the fact that your client, Scott, just told all of his friends about the amazing job that someone else did. This was a great opportunity to be telling your story to the people that you actually want to hear it, but because of the model you're using, he's talking about Matt instead. Now, we'll call this scenario A, the outdated third-party referral model. Now, what about another scenario? Let's call scenario B. Same great client, Scott, same $600,000 income, but this time when he calls you, his go-to person, rather than you telling him to go see Matt, you tell him that you're going to get together with your team and then be back in touch in a couple weeks to go over some ideas. From there, you pick up the phone and you call your team, made up of some of the very best specialists in the country, and they go to work on your behalf, but not just calculating the numbers on a defined benefit plan, looking at the complete picture. I mean, making sure that all angles are considered. And now they're working on your behalf with the same objective to serve the best interests of your client. Unlike the old outdated referral model where everyone's just trying to sell the one thing that they specialize in, they are now removing their self-interests and working together as a team. So once your team has done their initial review, they call you back and say, okay, here's what we see. We have an income tax issue, and that can be addressed by using a qualified option, such as a defined benefit plan. However, another alternative might be a combination of a qualified and non-qualified plan. And we believe that Scott should also consider cost segregation because he owns the building that his company operates in, which would actually help him increase the cash flow, and we could use that for the contributions to the non-qualified plan. By the way, he needs a buy-sell agreement for him and Sarah, and this is how we would suggest structuring that in terms of setting it up. Speaking of the business, I mean, they've experienced a lot of growth, so we would suggest some behavioral leadership exercises to really improve that employee retention and develop his leadership skills. Lastly, he has a term policy that we see expires at age 65. Really, since his wife is 7 years younger than him and they have 3 kids, he probably should consider getting some permanent insurance as well. Then you walk through the ideas one by one. And by the way, you've already been introduced to each of these strategies as well as many of the specialists prior to the call on our educational webinars or at any of our educational events where you receive CPE credits for that education. Once you have all your questions answered by the specialist, you can confidently give it the initial green light. You then call Scott, let him know that you and your team have been working on his situation and that you're ready for him to come back and take a look at a few different options. So Scott meets with you and your team if you'd like, either in person or virtually, and at the end of the meeting is absolutely blown away by the amount of work that has been done on his behalf. Just as before, he decides to move forward. But this time, not only did you address his income tax problem, you also helped protect his family and his business in addition to his estate. So now let's go back to the same football game, the same group of affluent friends, and the same conversation about business. However, this time, it goes something like this. Scott says, business is booming. Sarah and I couldn't be more excited. I mean, we just landed a new 10-year contract. As a result, my company has doubled in revenue and my personal income has doubled as well. Initially, I was a little worried about the taxes, so I called my accountant. I met with him and this incredible team of his. They came up with some great solutions for me. I mean, basically, it helped me get my business on stronger ground, saved me about $50,000 in personal taxes, protected Sarah and me in case something happens to either of us, and leave significantly more to my family down the road. Now his buddies say, wait a minute. You said your accountant did that? I mean, my accountant's never talked to me about any ideas like that. And Scott says, yeah, that was my accountant and their amazing team. And then the natural question from Scott's friends becomes, whoa, can I get your accountant's name and number? And then one by one, Scott's friends are now getting your number, not Matt or some other referral partner. And that is real organic growth with the exact type of successful business owners that you want to be working with. So let's compare the two options. The outdated third-party referral model exposes you to unnecessary referral risks, puts your clients in an uncomfortable situation, produces really mediocre results, and lacks organic growth. Whereas the team-based model eliminates third-party referral risk, allows your clients to stay comfortable working with you, someone they already know and trust, produces world-class results, and develops true organic growth when your clients are telling your story. And it's not just about the money or the additional revenue opportunities of the new clients you get. You also have enormous satisfaction in knowing that you're doing the absolute best job for your clients. So if you're looking to gain a deeper level of trust with affluent clients who are comfortable referring you to their friends, if you're looking to provide better value to your affluent clients, if you're looking to increase your own financial success and enjoy a greater quality of life as a result, and if you're looking to spend less time in the office, have less stress, and have more time with your friends and family, then you're definitely in the right place. One of the key ways we help accountants with this evolution is through education. We have monthly educational webinars, as well as in-person and virtual events multiple times throughout the year, where we offer CPE credits while bringing together some of the most forward-thinking professionals in the industry. We also provide access to online training portal to teach you a step-by-step process on how to identify, contact, engage, and monetize opportunities with your very best prospects and clients, as well as an online community made up of other accountants and specialists from our virtual family office to support you along the way. In summary, we're here to help accountants transition from the outdated third-party referral model to the team-based model by leveraging the virtual family office concept, which allows them to provide more value to their clients through proactive and holistic planning. We believe this blue ocean approach to partnerships creates a win-win-win for everyone involved. If you're interested in learning more, we would encourage you to set up a free consultation to dive into more details. We hope to have an opportunity to connect soon.